Good afternoon, Wealth Our Way Nation. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform, Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome each and every one of you to episode 127. We are continuing our home buyers workshop this month. It is week 2, and we are talking all things mortgages this week. But before we get started, you know I got to practice the attitude of gratitude and thank each and every one of you who are live with me as I stream across the Wealth Our Way Facebook and YouTube pages. I give that special Wild Nation salute to all the members of Wealth Our Way Nation who watch this program overnight, over the weekends, when they under their desk at their job, anywhere they can squeeze 15 minutes of financial literacy in, they catch the pre-record of this program, and then a heartfelt how are you to the good folks on the Life 101 platform who listen to the audio of this very here program. So as I told you before, we're going to use Tuesdays of each week to do a market recap from last week, to talk about things that are going on in the economy, and to tee up what we have going on tomorrow on the Financial Power Hour. So one of the things that I wanted to talk to you guys about, a lot of things that we say here at Wealth Our Way are repetitive, but they're not the same. Repetitive in reinforcing the same principles that I'm trying to ingrain into your skulls so that you know how to make wealth over the long term. As I have always told you, there is a huge difference between being an investor. Investors build wealth over time, and a trader. Traders are speculators. Traders think they know better than everyone else. They think they can guess or use logic and different tools and techniques to beat the market returns. I always stand my ground that I don't think trading is a successful way to make money. There are a lot of reasons why trading is not the ideal way to try to attempt and build long-term wealth. One is trading by its very definition is short-term in nature. Anything short-term is taxed at the highest possible rate. So before you get into the game, you already have the tax man against you. You already know that even if you're successful, if you successfully trade, you're going to put yourself in a position where you're paying the highest taxes possible. The second thing is, if you've learned nothing over your time at Wealth Our Way, markets do not behave based on their underlying fundamentals, the underlying financial fundamentals. It would seem obvious to people if they're trying to get involved in financial instruments and things of that nature, that the financial markets would behave the way the companies or the instruments that are in those markets are moving forward. That is not the case. If you have a company that has sound fundamentals, that has a great management team, that keeps expenses low and keeps revenue high, that does not necessarily mean that the stock is going to perform well for that company. Also, the other opposite end of that is true. You can have a company with horrible financials, horrible management team, but the stock do extremely well. Why is this? Because the stock market focus more on the second word than the first word. It's a market. And a market is a place where we put buyers and sellers and match them against each other. So long as there is someone willing to pay for something, that is demanding, and demanding will make things go up. If you look at different stock performances for different markets over time frames, you will see that consumer, or as we say, investor behavior dictates how this market performs. And you tell me who on this globe can predict someone else's behavior. That's what you're telling me as a trader you can do. You're not telling me what companies are going to do, what commodities are going to do, what cryptocurrencies are going to do. You're telling me how the next person, the next consumer is going to react to those things. And I think you'd be better off just trying to go see a fortune teller and have them guess what's going to happen in the next 10 years than trying to trade the market efficiently. So with that being said, with my little dig on traders today, let's talk about how investors, people that I work with, people that I want to work with, people who come and listen to the advice that Wealth Our Way offers, how investors need to get their hand slapped a little bit right now, because almost every person that I talked to in the month of January was telling me some form of a panic story behind the market, whether it was the cryptocurrency market or the stock market, even the bond market. They were concerned that the end is near. I had one client call me up, told me that God had spoke to her in her sleep, woke her up and told her to sell everything that she owned. Now, how do I go against God? As you know, I'm a financial professional. God is the ultimate professional, but I had to explain that God would not want her to be short on money in the future, and that we need to prudently look at how things are actually performing. So when I got that call, the S&P 500, which is the broad-based stock market in America, was down 11% in the month of January. And I'm going to be like a real newscaster here and turn back and forth from my monitors, because I have another monitor over here helping me with the information that I'm telling you guys. As of today, year to date, right now, as we're speaking, the S&P 500 is down 5.9%. So once again, down 11% in January, down 5.9% first week of February. There are TV personalities, magazines, people on the internet that make a great deal of money convincing you that any of that should matter. I don't make as much money as these people because I'm telling you the truth, and the truth is always the thing that people don't want to buy. You shouldn't care about the difference in the stock market from January to February. Unless you are living off of the money that you have invested in the market and you need to make a short-term change in how your day-to-day cash is allocated, what happens over a 3-week period is not what you should concern yourself with, because that 3-week period is a short term. So here's something I say, I always use analogies here at Wealth Our Way. I'm on a diet, always trying to lose this weight. And I've read books that say, I used to think I had bad willpower. I learned that I didn't necessarily have bad willpower, that I put myself in more situations where my willpower is tested than people should do. If you keep giving your willpower a swing at the bat, appearance at the plate, eventually it's going to strike out. You would be better served conserving your willpower. You'd be better served leaving yourself in situations where you don't have to choose. So I am intermittent fasting, not eating after a certain hour. This past weekend, I took my younger 2 children to an ice cream parlor after the hours that I don't eat anymore. It wasn't hard. I literally didn't want the ice cream. I was good. But that was a bad decision. I put myself in a position, I love ice cream. I put myself in a position where my willpower could be tested. Fortunately, it wasn't, but I put myself in a position where it could. Technically, I lost the second I went to that ice cream parlor. Whether I decided to eat ice cream or not, I lost by putting myself in that situation. You, as an investor, put yourself in a bad situation when you change your focus from long-term to short-term. I'm going to repeat that. You, as an investor, put yourself in a bad situation when you change your focus from long-term to short-term. When you are concerned about what is happening every day in the market, you can tell me all you want. Hey, Tank, I know it's long-term. I'm not going to panic. I'm not going to make any knee-jerk reaction decisions. I am here to tell you your willpower will only work so many times. If you keep on Googling what the S&P 500 is doing, or keep on turning on CNBC and listening to Cramer, you are going to find yourself making changes that are emotionally driven. You're not going to stick to your plan. Your plan says, do what the plan says and don't worry about it. I have a budget. My budget tells me how much I can afford to put into my investments. I have an investment plan. That investment plan has an asset allocation. I have a dollar cost average strategy to put money in. I'm going to give you a very personal example from your boy Big Tech. So we're going to talk about my cryptocurrency holdings, and then I'm going to get into what this week has in store for us. My cryptocurrency holdings are like 2 different things. I have 2 different platforms that I trade cryptocurrency on. On the one platform, I have my 5 cryptocurrencies that I rock with, that I use as long-term investments. Then I have what I call my lottery ticket cryptocurrencies, where I've put a little bit of money by my standards into 3 different cryptocurrency coins. And every so often, I'll look to see if y'all are never going to hear from me again. Because if I look at that and all of a sudden one of my coins that was worth 1/30th of a penny is now worth $5, goodbye, Wealth Our Way. Goodbye, Wild Nation. I'm going to be in Panama with a 22-year-old. Just playing. She'll probably be 24. But in any event, the reality is that those are my lottery ticket tokens. I don't take them seriously. I bought them with money that I made elsewhere. Instead of buying lottery tickets or going to the casino, that's where I put it. My serious cryptocurrencies, every Wednesday, I dollar cost average a certain amount of money into them. They were getting their behinds kicked for the last 4 or 6 weeks. Now I'm up 22% across the board as a whole portfolio. Why? They are doing no better 6 weeks later than they were. They've gotten back to the Mendoza line, back to even. But because I stayed true to my dollar cost average strategy, and every Wednesday I put $500 in to the various coins, they are now back up from being at their lows where I am up and I have a profit, because I stick to my plan regardless of what's going on in the market. If you do that, you'll be successful over the long term. If you don't, you're going to cry me a river. So with that being said, I want to talk about one more thing before we bring the subject for this week with mortgages. The Federal Reserve Bank is raising interest rates this year. They've already said they're doing it. Their first quarterly meeting is next month in March. People are expecting a 25 basis points. 25 basis points is 1/4 of 1%. We could see as big as 50 basis points, half of 1%. Guess what? That's already priced into the market. The reason you're seeing the market go down 10% in January is because the Fed said they're going to raise rates. So when the rates actually get raised, the market won't move too much on that news because people already expect it. Now, if they raise rates more than everybody is thinking they're going to, we'll see the market drop. If they raise rates less, we'll see the market go up. But what I try to tell people is the news is already factored into the stock market. By the time me and you hear about what's going on, the market already has factored it in. This week we're talking about mortgages. And because we're talking about mortgages, I'd be remiss to not tell you that there is a relationship between the Fed's changing rates and mortgage rates, but it's not as dramatic as you may think. Mortgage rates are tied to the 10-year Treasury bill. And yes, the 10-year Treasury does have some relationship to the Fed rate, but not as much as one would think. The Fed rate is the rate that banks borrow money from each other at. So the Federal Reserve Bank sets that rate, and then they put a pad on that rate when they put money into the economy, lending it to you or me as we go into the banks for credit cards, auto loans, student loans, anything that we borrow from the bank. So those short-term rates get affected very seriously by what happens with the Fed. The mortgage rates, not so much. So it's very important, as we have my girl Liz Paris, and Liz made a move. She went from Loan Depot to Movement Mortgage. So she'll tell us all about that tomorrow on the Financial Power Hour. And she's going to come on and talk about how to get through the mortgage process smoothly. I'm going to be all ears because I'm down here in the A about to buy a new crib. I got my realtor out there scouring the greater Alpharetta, Johns Creek, Roswell area to find me a stank old home where I can move in, be comfortable, get me a maid. Not a maid, a person to help around the house. I want to be politically correct and be able to kick my feet up and broadcast to you guys. So I am so looking forward to tomorrow night's broadcast, 6 p.m. right here on Facebook and YouTube, where we will have Liz Paris from Movement Mortgage to talk about the Financial Power Hour. Please go to our new Facebook page. It's Wealth Our Way Network, and subscribe. I need to get to 1,000 subscribers. That's how they give you the little button in your thing. I got to have the button. So please help your boy out. Get me 1,000 subscribers. Go to Wealth Our Way Network and subscribe. And please remember what I always tell you guys, because y'all are my people. Wealth is not only for the wealthy. Have a great day, and I'll talk to you tomorrow night at 6 p.m.